Mark and Panote, thank you very much for joining us today. As the Group CEO of Frasers Property, you have a unique perspective on real estate, not just in Southeast Asia, but Australia, Europe, and other parts of the world as well. I wanted to try and tap your expertise, share that with us. Can we start with Singapore? And Singapore has been trying for a while to keep a lid on the property sector to avoid the kind of excesses we've seen in other parts of the world. Putting you on the spot, do you think that Singapore's property curbs have gone too far?
Thank you, Sunil, and thank you, Bloomberg, for having this event in a timely way for ASEAN Summit as well. So I have been relocating myself to Singapore in the past 2.5 years. It has been a very exciting city, and it has been a very promising platform as well in really expanding within ASEAN. And in part of real estate, Singapore, as you know, there has been a position that they just set out early this year on the slowdown, the growth from 2.5% to just 1.9%. But however, I think the light of real estate with all the major that policy that has come out to slow down the investment and the pricing of real estate, it has been positioned to really how Singapore is just setting its next course as well on just in March, URA, Urban Redevelopment Authority, has launched a new master plan for Singapore as well. Mm-hmm. And has been adapting for looking how Singapore will be more future ready. It's also really voicing out from private sector and developer like us as well, in viewing and giving our expertise in what we do and how we'll shape the city. So it's see a good potential of how Singapore achieve what it does within the commitment of their plan to build Singapore. And now they're looking at the next 30 years. And so in the light of that, real estate sector has been the part a lot of people talk about urbanization and planning that linking to future economies. Looking in what Singapore is great about, in my view, is how they shape the infrastructure in the city that is ready for the software and the system, the business that would come in.
So you think they did the right thing with their measures like tightening up LTVs and taxes on foreign purchases?
As us, we want it to be more open for sure, but with the cooling measure, has helped to stabilize. And now where things are, I think they do that much earlier. It took that cooling measure for the past 2 years actually. And now what it does when things are slower down, we start to see ourselves taking up. I think the rent on prime office has started to grow. The retail leasing also has been start to take up. So in view, it has been done right for overall of Singapore economy, in my view.
So do you think the time is right to revisit those restrictions and see if it's maybe there's a case to be made to try to ease them a bit?
It's definitely to the view of government seeing how overall view of how the market will be more ready in taking its shape. I think Singapore still definitely looking at how to find a way to build the balance between local economy and foreign investment that come in. And I think that balance is good, is to see the sustainability of the economy in Singapore. Okay. So it's where it is now.
Before we go to the urban renewal plan, just give me your outlook on Singapore residential prices. Do you think they're going to be bottoming out, recovering in the second half or through next year?
That's what we're actually seeing, and agree with that view. We start to launch out some of the earliest new projects, like premium luxury residential projects. We also just been growing our suburban mall portfolio in Singapore. So it has been timely for us in view that the strength of Singapore platform that we have is critical, and it's timely for us to start growing and expanding.
And the urban renewal plan calls for rejuvenating older buildings in the CBD. It calls for more residential living in the city centre. Is this a good idea, and is it an opportunity for Frasers, and if so, how?
It's unique in understanding and collaboration with private sector, and what we see of the city planning, the government policy. It has been very fruitful to us in what everyone talking about: autonomous vehicle, 5Gs, innovation sector. It has been what Singapore really planned the infrastructure to support all of that. And in part of us preparing ourselves, we're looking at more of experiential retail. It's also looking at way of understanding user experience beyond just building concrete and steel. It's a software in it, and the core value and strategy that we put onto our cityscape development is to looking in more of the concept called placemaking. And in this, it's a fundamental part of us now looking at where we build sustainable asset that we will be able to creatively building up community, improve quality of life, and be really part of the fabric of the community.
You have a big retail presence in Singapore. Are those more properties going to stay relevant in the age of e-commerce?
So it's the light of the sharing in the earlier session as well on the view of technology. We do put a lot of emphasis on the future model, and real estate in the right adaptation. We got to be willing to see what change will come, and we're looking at that as well. For us, we uniquely invest in suburban retail, and we see the benefit of being very resilient portfolio, because Singapore put a lot of effort in creating satellite city, cover different node of Singapore, and to expand the island in a more pragmatic way. So what we do, we're looking at how retail is a most challenging landscape, but it's almost, if you've done it right, it's the most opportunistic one. And being of our suburban retail, the view of it is we see ourselves as a last mile, as well as we see ourselves as a center of gravity in each of the nodes. And so the mix, the leasing strategy, already seen in light of changing how conventional retail shop are dying, and more engagement space, F&B, prospering, but it's still a very competitive landscape. So there will be way for us in view of taking that risk into opportunity and keeping ourselves relevant, and that's why user experience, placemaking, it's the critical platform for us to understand and be able to tap the value of that.
So you have to innovate that user experience to make sure people keep coming.
Definitely.
Okay. I know you wanted to talk about Thailand and Vietnam. Maybe we can start with Vietnam first. Give me a sense of the opportunity you see there and what you'd like to achieve there.
Vietnam has been a focus of, in my view, of TCC groups for a long time, and we see as extended part of our home ground like Thailand. Vietnam is the most natural extension for us because we do understand these regions, and Vietnam do see the relationship with Thailand in a very fruitful way of the connecting economy. So as real estate, Frasers has been in Vietnam for the past 10 years, more than 10 years, and we're just looking at the next stage of how, when you want to do real estate, you want policy and as well as the economy to be more stable. And it has now shown us the very confidence of why we want to be interested in Vietnam in real estate investment. So we have started to going in and also collaborate with affiliated group as well that invest quite strategically through different sector, from beverage to consumer trading, and as well as hypermarket and manufacturing. So for us, real estate, it's a tricky thing because it's a localized business. You need to be able to really build your way into the local ground and the feel of it. But the city like Ho Chi Minh has been opening up for foreign investment, and it has been a proven market. But Frasers now has been focusing in expanding in both Ho Chi Minh and Hanoi in real estate asset class, from industrial logistic warehouse, from office building, and as well as hotel and residential projects in Vietnam.
So is Vietnam the way you see the most attractive opportunities in the portfolio of countries you operate in?
It's the high growth, sustainable economy because of everything that tech within aging the consumer size, as well as the wealth that has grown up very quickly. The new policy of Vietnamese government that looking at more open market, more transparent, clear rule of law. So all of that has given us a confidence in seeing the growth opportunity.
Coming to Thailand, we've just been through the election. Does that affect your perception of the opportunities in the country? Some people are worried about the growth outlook and worried about whether businesses might invest less because of that. Is that a concern for you?
So back to Thailand is the true home ground. It is the most confident that we have, and the way we see exactly of what I'm doing in Thailand, and what I'm doing in Thailand is act as a foreign investment into Thailand because of Frasers Property vehicle that invests into Thailand.
Right.
And the capability that we brought into Thailand to grow a very credible real estate portfolio and to seek into the sector that is the most promising through, in parallel to the policy that the Prime Minister has been given in expanding infrastructure investment, in looking at more connecting economies and connecting ASEAN as well. So we has been growing, Fraser has been growing into Thailand only in the past 2.5 years. And we have building, consider the largest platform of industrial logistics portfolio. We also undertaken project development that would change the landscape of Bangkok.
Yes.
And that's in our view is the confidence that we put into the sector, and because as well as the open door from our local partner or affiliated group in supporting for us to be able to be present here as a foreign investment into a project like One Bangkok.
So let's talk about One Bangkok, almost a $4 billion project, huge mixed-use development. Why did you decide to take on this big investment, this big bet on the Thai capital? Just what was your thinking when you were deciding that?
So the vision that was set is to see a development that is worthy to the city, and how this development will bring what vision on the group chairman is how One Bangkok will bring the worthy stature of the city to the world stage. And within One Bangkok, as it is a bold and ambitious one, that we are building the largest integrated real estate development platform that ever built it in Bangkok by any private sector. It is built by the collaboration of team, and that's to the leadership of the CEO, like Sun Sulin, she's from Singapore. We have different platform of professional come from different part of the world, really contribute to see the exciting part of what Bangkok can offer.
Did I get the investment budget correct? Is it 120 billion baht?
That's correct.
And you're not there's no change in how much you need to put into to create this vision.
That's just to say that is the core and shell, and what it will connect 1.8 million square meters together in one footprint.
And when do you think the first phase will open up?
So the first phase will be 60% of the GFA, and it will be launched by 2023.
2023, okay. And when do you think the entire project will be complete?
That will be complete by 2025.
Okay. Is it fair to say that this project envisages a different kind of city in 5 or 10 or 15 years, a kind of a center for ASEAN? Is that the logic behind what you're trying to create?
I think it's exactly the fundamental of what I share on what we call as placemaking, experiential real estate business model. In our view, we achieved that in some of the major reurbanization in Sydney, like the largest redevelopment in Chippendale as well. We did develop Central Park. It's also 2 billion Australian dollars redevelopment of the site from the old Foster Brewery into a large mixed use integrated to 2 university, building the largest residential component within the area and a high rise. We also, that's why how we create a real estate that engage with the surrounding. In Singapore, we did the same thing to really conquer the northern part of Singapore, the largest real estate retail node in North Singapore, and it's called North Point City. And it's been the journey for us to connect to the city. And One Bangkok just following in a more ambitious way, in our view, how the real estate is fully integrated. And it's also in a journey in the past 10 years that I've been working with Bangkok Metropolitan as well, in shaping how we could work together to make the city more connected, and how our node will be able to create the offerings that is worthy of what Bangkok can deliver.
Do you view One Bangkok as a long-term asset for TCC, or eventually is it going to go into a REIT, for instance?
Just to say it, for One Bangkok, it's definitely a long term when we do something like this. And in the view of opportunity, we have what we are now as Frasers, the best backing, whether it's TCC groups and also already a committed partnership in developing One Bangkok. And so the opportunity is endless in my view on the success of One Bangkok when it's done. And we've seen how Bangkok will continue to shape itself to be really helping out in the connecting ASEAN.
So is a REIT an option for some of the projects? I mean, is that a possibility in the future?
I think that the market are now much more open. We are engaging, we're talking to other developers. I think Singapore also has given me the real life example as well on how developers really work together to make the city better. And I think in part of that journey, I'm also hoping to making sure we can collaborate with our peers, even what people would look at it as competitor, to see how we shape the city better for Bangkok.
Let me ask you about some of the curbs we've seen in Thailand on property. Macroprudential steps by the central bank to try and cool the property market. And we had an interest rate increase in December, the first time since 2011. Do you think that there's going to be a slowdown in the property market here this year?
There have to be a caution on different part of real estate asset class, in my view. But overall, in terms of the new real estate development, I'm seeing what we see is what we call as an upgrade of the products. It's what it is that hasn't been in the market yet, whether it's the new retail space, the new commercial office space. Just to say, in light of commercial office, it's statistically more than 60% of the stock now within the market is more than 20 years old. And so the spec of quality office and at the right location, it still can serve to change and shift the demand. And some of the old office buildings are even more prone to redevelopment in many sense. So I'm still seeing the opportunity on Bangkok to see it upgrade in real estate quality and real estate assets.
So you're not so concerned about the slowdown risk
as we known on residential, whether it be on the condominiums. I think there's seem to be quite a lot of supply that is in the market. So the cautious on land costs doesn't get any cheaper, and the cost of build, as you said, on a lot of view on the economies, the construction costs could rise. So it's in view of the cautions to a lot of financial sector to view of how they would be more comfortable in financing it, in my view.
Okay. We haven't got too much time left. I know you also have a big operation in Australia. We had an interest rate cut there and a bit of easing in some lending conditions. Do you think there's going to be... Is there light at the end of the tunnel for the Australian property downturn?
So Australian market is the second largest market we invest out of Frasers. It's cover 30% of our assets. It is, in view, still the strongest contribution to the group as well. We are developing roughly about 15 to 2,000 home a year. And we have a stock over 16,000 units within the pipeline.
Okay.
And we are closing our sales each year about closer to 2,500 units. So, but where we capture the value, we are capture with more of a local base. It's not condominium, it's not high-rise, high-density development. City like Melbourne and Sydney is still growing, and it's growing in a steady rate. But in our view, we absorb to see how you got to choose to be in real estate in the right sector at the right time, and it's easier said than done for sure. But we have been focusing on local residential market, and when we went in there 4 years ago, it was the market that covered 30% of our sales by the Chinese market. We tapered that off in 2 years, from 30% to about 10%. In the asset class like industrial warehouse and logistics, it has been a growing sector for us, and it has grown us from zero as a portfolio to now we grow to in total market where in Australia, Europe, and Thailand now it's cover 20% of our AUM. And as just to give that scale, Frasers has grown since the listing in 2014 from 13 billion US in asset under management. Today we are at 24.3 billion asset under management.
So you quickly, yes or no? Aussie prices recovering next year? Well, I'm going to put you on the spot.
I think we've seen the bottom of Australia.
Really? Okay.
In our view, and we're looking forward to because of the price that rise and a lot of things that you has been sharing as well. So, but we see a good light at the end there.